What's up, everyone? In this video, we have some giant news with Alibaba stock. They announced a $25 billion share buyback program. Their stock is flying to the upside today. We can see they are up over 12%. Over the past couple of days, this stock has just been exploding. It went from $72 up to highs of $118. It is booming. So basically in this video, we're going to explain what this share buyback really means, and we're going to be covering what's happening with Alibaba stock. So by looking at the CNBC headline today, we can see Alibaba surges more than 11% after it ups share buyback program to $25 billion. So basically what this means is Alibaba is going to be taking $25 billion that they have. They're going to be buying their shares on the open market over the next 2 years. And basically what that does is it increases the ownership of anyone who currently owns Alibaba shares and anyone who will own Alibaba shares in the future. So basically here I have a perfect example to demonstrate this. So if we just go to like my little simple notepad example, let's say we look at a company before and after a share buyback. So let's say we have company A, right, that has 100 shares outstanding. If you were to buy 5 shares of that company, you would own 5% of that company. 5 divided by 100, 5%. Now here's the thing. Let's say that company announces that they're going to do a share buyback program and they're going to buy back 20 shares of their stock. If you still own those 5 shares, the company's shares outstanding will go from 100 down to 80. So instead of you owning 5% of the company, you will actually own 6.25%. And this is actually a giant increase, even if it doesn't seem like it, because you're still owning your 5 shares, but the only difference is that the shares outstanding or the total supply of shares out in the market decreases, which makes your ownership higher. So that's basically how it works in simple terms. Of course, it's a little bit more complex on the open market, but this is basically the main concept. So Alibaba's going to go out on the open market from now until March of 2024, and they're going to basically spend $25 billion buying back their stock. This is normally a good thing, and it normally works pretty well for companies. Basically, companies have a couple different ways to return value back to their shareholders. Of course, you could do dividends and share buybacks and things like that. But a lot of people prefer share buybacks rather than dividends because it is more tax efficient, and it's normally just the better thing to do, in my opinion at least. But overall, looking at Alibaba stock, they're definitely running up. I own Baba for the long term. I plan on holding them for a long time. I know there's a lot of mixed opinions with Alibaba. Some people love them, some people hate them, and there's not really like a neutral ground on this one. Like if you have an opinion on it, you most likely either hate it or you love it. So I am someone who is a fan of Baba. They're not a very large percent of my portfolio, but they're holding for the long term. So keep that in mind. But either way, they're at a really low level. The biggest thing for me looking at Baba is the risk-reward ratio, and it also gives exposure outside of the U.S. It's important not to have all of your eggs in one basket, of course, but sometimes having exposure to foreign markets can be pretty good. So if we look at some of Alibaba's fundamentals, they are a powerhouse, definitely. Over the past year, we can see that their stock has been struggling quite a bit, right where my cursor is. It just shows, the past 6-month chart and the past 5 years chart. It has been struggling quite a bit. This is mainly due to sentiment around Alibaba and just China stocks overall. There was a lot of fears related to Alibaba being delisted from U.S. markets and rising tensions between the U.S. and China. But overall, Alibaba is very strong fundamentally / financially. It's just the sentiment has been really pushing the stock down. We can see by looking at the revenue, it has been exponentially growing. Same thing with their cash flow, net income, gross profit. It's good. Their fundamentals are pretty solid. Their price to sales ratio is only 2.5, which is very low for a company like this. Overall, their fundamentals are good. And if we go back to the CNBC article, we can see that the deputy chief financial officer for Alibaba said that Alibaba's stock price does not fairly reflect the company's value given our robust financial health and expansion plans. So it's like even Alibaba obviously thinks that the stock is not accurate / undervalued right now, which, I think it's at a good level. Does this mean it's going to explode up over the next month? Anything can happen in the short term, as we all know, but I feel like right now it's at a good level in terms of like risk to reward for the long term. Another thing I do want to highlight though really quickly is if you're looking at Alibaba for a short-term trade, I really want to emphasize that it's really risky right now specifically because over the past 5 trading days, the stock is up 60%. 60% over the past 5 trading days. Like, Alibaba is not a penny stock. Like, it is a multi-billion-dollar company. A 60% move over 5 days is ridiculous. So it's like, while I own Alibaba and I am bullish on it, it's important to be objective and be like, all right, if it went up 60% in 5 days, like, it's a little bit overbought. So keep that in mind. For the short term, it's a little bit overbought in my opinion, but for the long term, it's still at a good level. The risk-reward ratio is pretty awesome in my opinion. And of course, share buybacks are a great thing, like in 90% of cases. So that's good to see. If we go to like Alibaba's max weekly chart, they have been doing very well historically besides the destruction over the past year. But again, like that was just mainly off of delisting fears and things like that. And the Chinese government, you can say, basically said that we're gonna work together with the U.S. to make sure our shares do not get delisted. So that's good to see. Like I said, their fundamentals are pretty strong. The stock's booming up. So overall, it looks pretty decent. In terms of levels to watch, I would really encourage you guys to watch out for that $120 level. It's a pretty big resistance level. There's also resistance right around 130 or so keep that in mind. For 2 levels to the upside, those are 2 resistance. And then looking at like intraday support levels, there is support right around 110 and 100. 100 has been a very important level in the past. It is a psychological level, and the stock has just bounced off of 100 quite a bit, both to the upside and the downside. So keep that in mind. Overall, I think it looks pretty good, and it's nice to have exposure to other countries, at least in my opinion. But overall, it's looking good. And then another thing, too, is Charlie Munger has been buying the dip with Alibaba as well. So, that just, it makes me more confident, when you see someone as influential and successful as Charlie Munger, when he's not only buying the dip on Alibaba, but also doubling his position, it is a pretty nice signal to see. So I like that. And last but not least, if you guys want to analyze any company like I analyzed Alibaba today, definitely check out the first link in the description and the comments down below. Our stock analysis dashboard is pretty awesome. It shows you the most important financial data to look at when analyzing any company, and we have some ginormous updates in the works with this one that will be released in like 1 to 2 weeks. And I promise you, you're not going to want to miss it. When the updates are released, the price will rise. If you decide to sign up before that, you will be grandfathered in at your price. And the updates are pretty sick. So I definitely recommend checking out that first link in the description and the comments down below. I use this dashboard literally every single day, and it's a game changer, especially if you invest in any companies for at least like the medium to long term. So definitely check it out. Besides that, thank you guys so much for watching.